Ladies and gentlemen, welcome. Welcome to the 2025 Asset Management Conference for Institutional Investors organized by the Institute of Finance and Financial Regulation. I've just received information for registrations. More than 600 delegates have registered from 39 countries and more than 300 companies. So thank you very much for attending today from all over the world. The Institute of Finance and Financial Regulation is an international research center which connects cutting-edge academic research with the industry needs. As you may know, we have a unique team of IFFR fellows, both professionals and academics from leading universities and institutions in order to achieve our goals. Today, as in the previous conferences, we have a unique lineup of distinguished speakers, both academics and professionals, who are going to address a number of timely topics for institutional investors. Before proceeding, may I thank the conference co-organizer and dear friend, Theodore Economou. You're going to see more on Theodore in the coming sessions and in the concluding panel. I would like to thank, of course, you all for attending, our speakers and our sponsors, who we regard them as valuable and long-term partners. In particular, I would like to thank our platinum sponsor, UTI International, our gold sponsors, Alpha Asset Management, Iolcus Investments, and Piraeus Asset Management, and our silver sponsors, Alpha Trust and Systemic. May I also thank our supporters, the Hellenic Fund and Asset Management Association, the CFA Society Greece, and the University of Piraeus Research Center. May I also thank our media partners, Banking News, Business Daily, Euro Today, Next Deal, and the kind support of Sayles conferences. Needless to say that all these would not have been possible without the support of the IFFR team. In particular, I would like to thank Mrs. Maria Giuli and Mr. Stavros Efthimiou. Just a couple of words on the format of today's conference. We're going to have a flexible format in the sense that we're going to have structured sessions with presentations, as well as solo speakers and a very lively concluding panel roundtable discussion. May I encourage you to submit questions. One of the features of the IFFR conferences is that we allow for a lively interaction between speakers and the audience, so you can submit your questions via the platform. And I would like also to encourage you to fill in the questionnaire, which is going to be distributed to you at a later stage through the conference. So without further delay, may I welcome Mr. John Gidman and Mr. Chris Aesopos. Chris is going to chair the session on challenges for institutional investors. Chris is the chairman of the Hellenic Fund and Asset Management Association and the CEO of Alpha Trust, a very seasoned professional with more than 30 years experience in the asset management industry. So Chris, the floor is over to you and John. John, thank you very much for joining. Chris is going to introduce you now. Thank you.
Thank you, George, for your kind words, and congratulations for this year's conference as well. It's always something very good to look at every year. And thank you, John, for being with us. Let me just introduce John. John Gidman is the CEO of Loomis and Sayles company, and also the CEO of NIM-os LCC, a subsidiary of Loomis Sayles that provides technology, operating, and other services to Loomis Sayles and Company, Natixis Investment Management, various affiliates, and selected clients. He is currently the president of the Association of the Institutional Investors has 34 years of experience in the investment industry and previously has held executive leadership positions with Evergreen Investments, State Street Corporation, and Fidelity Investments. So he is more than the right person to guide us through the challenges and the way forward for institutional investors. And the floor is yours, John, for the next 10 minutes, and we'll save approximately 5 minutes for a Q&A session at the end.
Hey, Chris, thank you so much for the introduction, and thank you, the Institute of Financial Regulation and Finance. So I'm John Gidman. As you said, I've been with Loomis Sayles for 25 years, and I've been in the industry for almost 40 years. And we find ourselves, I think, at a period, an inflection point in our industry. You mentioned in biographical remarks, Loomis Sayles is owned by Natixis Investment Managers. And so we've been in the news recently, and some of the trends that we'll be living through are ones that others on this call have lived through in the past and are likely to accelerate in the future as we see our industry react to the many challenges it currently faces. When I look at the agenda in front of us today and the excellent program that's been put together by the Institute, it's clear that the agenda was put together recognizing this unique point that we are at. We see very clearly across our industry a much larger role for alternative asset classes across the range of portfolios that our firms manage for their respective clients. We've seen increases clearly in the use of alternative asset classes. Private assets, in particular private credit, are playing a significantly larger role. Real estate is part of almost every portfolio today, and the role of emerging markets and crypto, in particular, are finding their way into strategies that really are meant to address all of the risk factors that a client may want to be exposed to. But those are creating operational stresses in our industry. They're creating regulatory stresses. And without a doubt, they introduce new reputational risks for our firms. We're also at the same time seeing transformational applications of artificial intelligence, an old technology, but really now, finally coming into a state of ubiquitousness. We're seeing it across the globe, being used by our firms for alpha generation, for client-specific customization, and for sweeping changes in productivity across the middle, front, and back offices that will have profound implications for how our firms operate, how they're perceived by their clients, and how they're regulated in the various markets they participate. The foundational asset, though, for all of our firms remains trust. We are hired and clients' assets are given to us to steward based on the trust that they have in us. And so the application of new asset classes and the application of artificial intelligence coming together does create challenges for that trust equation. And we can see the trust being challenged in areas such as investment risk, particularly during times of high volatility in the market. Regulatory risk. I heard on this call that 39 countries are represented on this call. And the myriad of regulatory regimes around the world, create significant challenges for firms like ours. But then the biggest risk, I think, that we see is really reputational risk. Our reputation is what we get paid for. It's what the trust that clients put in us. And it's the asset, I believe personally, that we need to make sure that we invest the most in for ourselves and for our firms. One approach that we're taking in the United States and we're looking for involvement in volunteers across the world, is to, through a coalition of industry associations, we've identified a community of common interest that believes that we can significantly improve the trust equation associated with generative artificial intelligence by leveraging a three-pronged approach. The first is to identify common principles for the assurance of the application of artificial intelligence that is consistent with existing regulation. So we believe that there are common principles that can be adopted in a non-prescriptive manner that will help our firms and help our industry be able to clearly articulate the programs that we individually use to apply artificial intelligence in our businesses. Aided by the 4 largest audit firms in the world, we're working to try to establish a clearinghouse in the public domain, so a license-free clearinghouse that will provide sample policies and procedures that individual firms can use in order to develop their own policies and procedures in accordance with these overarching principles regarding the generative artificial intelligence assurance. And then the final work stream that we're launching later this month is the development of a common questionnaire. And the common questionnaire will be used by a little over 100,000 plan sponsors globally in order to have a common set of questions about the firms, about individual asset management firms' use of artificial intelligence, the oversight associated with it, the record keeping, and also the reporting in a way that would allow our clients to be able to compare the practices of our firms to each other in an efficient way. And so we're very excited about, the opportunity to launch this effort, which we think will be helpful to financial regulation, helpful to our clients, and also provide a mechanism for our clients to very, very efficiently evaluate the practices of their service providers. And so I wish the participants and the speakers great success in the remainder of this conference that we're now kicking off. And I'll be excited to hear as these themes relating to alternative investments and artificial intelligence are contributed by additional speakers and conversation. And I think it's important, and I'm excited that we are able to identify this inflection point that we're at. And I'm grateful for IFFR for putting the forum together for us all today. Thank you so much.
Thank you, John. So we have some questions from the audience. First one being, the US stock market has boomed over the past few years. Simply investing in an ETF yields a very significant return so far. Is there any space for other types of investment vehicles? What are your views?
So speaking for myself, and any remark that I make that I later regret does not necessarily reflect the views of Loomis, Sayles, or its management. Institutional investors are different than retail investors, and institutional investors' needs are not purely yield. Institutional investors typically hire 6 or 7 different asset managers, and they do it in order to get exposure to different risk factors and to manage an overall portfolio that meets that organization's needs. Some of it may be yield, some of it may be income, some of it may be hedging, others may be the needs of its balance sheet or of its operations. So one size doesn't fit all, and a booming stock market is only one part of a much broader equation.
Okay, thank you. Second question is, under the new Trump administration, what would be the impact in our field be? I mean, policy shifts, new leaderships, what's the impact of policy making under the new administration now?
I think without speculating on the future, I think what we've seen in the last couple days of executive orders is a significant shift and realignment with regard to the regulatory environment in the United States. So we can expect, I think that as firms adapt to those changes, I would expect industry to be in a period of incredible innovation and opportunity.
Okay.
And with that, increased risk.
Of course, yeah. So I would like to ask you some questions concerning your prime topic today. So what do you think is the biggest barrier to adopting a comprehensive framework for AI transparency and trust? Is it so difficult to get stakeholders, policymakers, independent organizations to collaborate effectively, or is it just some wishful thinking? And who do you see as the key players driving this forward?
So I do not see barriers at all. I see the industry coming together, and by industry I mean the stakeholders. So I see asset management firms, their service providers, including law firms and auditors, pension consultants, and asset owners and plan sponsors having a common interest in having clarity and having trust. And so, I've been gratified. We held a call similar to this among volunteers just before the end of the year, interested in participating in developing generative artificial intelligence assurance principles effort that I outlined a few moments ago. And, more than 73 firms, I think 73 firms were represented on the call on very short notice. So I think there's a tremendous hunger and strong appetite for coming together and solving the transparency and trust component of the application of artificial intelligence. But this is a rapidly moving field, and regulation has lagged behind, as has internal controls. And so I think the industry now is trying to come together to address the opportunity in a way that is transparent and trustworthy for its clients.
Perfect. I think we're running out of time. So I would like to thank you very much for being with us. And the floor is back to George.
Thank you so much, Chris.
Thank you, John. Thank you, Chris. Actually, John's ideas serve as a perfect appetizer, if you like, because later on we're going to hear more on Trump's effects, potential Trump's effects, as well as on AI, including whether asset managers in Europe indeed use AI or not.